It has been a day of new highs on the last trade. The Nifty has breached 22,700 on the way up, and the Sensex has gone over the 75,000 level in trade today. And the sectoral indices, whether you consider metals or banks, even the auto stocks, all of them have hit new record highs. But despite this positive sentiment, indices took a turn today, and they consolidated towards the latter half of this trading session today. Both the major indices have ended in the red eventually. So did most of the sectoral indices. So we've seen some amount of consolidation. But now, remember, all of this is happening ahead of the Q4 numbers that are just about here. TCS is going to kick off the earnings season this Friday itself. So how should you as an investor trade around this crucial time? What should investors keep an eye on? Let's discuss this. Sunil Subramaniam, Managing Director and CEO of Sundaram Mutual, is joining us, along with market expert Ajay Bagga. Gentlemen, great to have you with us, and it's a pleasure having you on India tonight to get in your perspective on the markets as ever. But Sunil Subramaniam, I'll come to you first. We begin with IT earnings. The sector has given one of the highest returns in the last 3 years, a very acceptable 23% growth in the past year as well. Do you think that run will continue?
I'm not so sure, because I think that Western world has to really come back to a growth path for this to sustain. I think IT grew on the back of the slowdown, and those YOY and the numbers are looking good. But overall, unless the outlook from the Western world moves back to a strong growth recovery, right? I don't see IT earnings continuing this strong growth path. But from a stock market perspective, they're always something that you must have in your portfolio, because they provide that element of safety and a cushion against repeat depreciation.
Have you pegged your expectations for Q4 earnings this time around, especially when it comes to fintechs that are being touted as one of the fastest growing sectors in the Indian context? Do you see delight or disappointment this time around from the fintechs? Ajay?
Oh, sorry, in the switch on, the name didn't come through. On the financial side, the bank's operational results have been pretty good. And, you get an idea from that, from the credit growth and the deposit growth numbers. We are expecting slightly softer NIMs, but that has got baked in. But overall, the bank results should be above muted expectations. I think they should do well. IT, as Sunil mentioned, I think there will be continued issues with the margins and with new order flows. And capital goods is something that we are looking ahead to. Railways, defense, manufacturers. I think a lot of that story has got worked on already. We'll have to look at their management guidances. So very key earnings season, Vikram, because the markets are at all-time high, and any disappointment could see a sharp sell-off in that particular stock. With this kind of positioning going into earnings means that there will be a lot of volatility on the back of what the actual numbers come out to.
So there are several moving pieces right now. Only yesterday, Sunil Subramaniam, we were talking about the BSE's market capitalization crossing 400 lakh crore rupees for the first time ever. And it's driven a whole lot by retail participation. Where do you see maximum value for growth in these markets for a retail investor today from all these moving pieces right now? And how much of that unfolding story on sectoral domination is likely to emerge in these Q4 results this time around?
So two things here. I think no retail investor should enter the market in anticipation of the quarterly earnings or with an outlook for less than a year and a half at this point in time. Okay, because a lot of the good news has already been discounted. It's already in the price, number one. Number two is, the retail investors who are entering through mutual funds are by and large doing that through SIPs. So for them, it doesn't make a difference. It's something they should stick to doing. But when your retail stock trader is coming in, right, I would argue that he should be cautious at this point, wait for the results. And like Ajay mentioned, there could be a few surprises, negative surprises. So wait for the information to come out. The third thing I want to stress here is that far more important than the actual earnings is the guidance from these companies on what the year ahead looks like. Because what you're going to see in earnings is not just the quarterly earnings, it's for the full year FY 23-24. But what is 24-25 going to look like for them? How do they see their order books? How do they see the whole thing panning out? I think stocks will react. Initially, after the earnings comes out, there could be disappointment, there could be euphoria. But soon, within a few days, people will look at what guidance did this company give and how is my FY25 EPS projection going to look vis-a-vis what I earlier thought it was. So I think the market is in a stage where it's going to move 1 year forward in outlook. So guidance is far more important. So I would encourage retail investors to stay cautious on the sidelines at this point, wait for the earnings results, wait for the guidance, and then take their fresh allocations. So given that I said a year and a half, the reason I said that is I think that we have to look for signs that the private sector capex cycle is beginning to unfold. The RBI governor mentioned that he's seeing green shoots, but honestly, it's been a lot of announcements, a lot of talk. But on the ground action, I'd like to see, apart from the government and some FDI, the private sector capex cycle, if that's showing through in the order books, then arguably for the next year and a half onwards to 3 to 5 years, I think infrastructure, capital goods, those kind of industrials, those segments will look very attractive to take fresh position in after the earnings season.
As much as Sunil Subramaniam is indicating that one needs to have an outlook of a year and a half, Ajay Bagga, in terms of what the markets are delivering right now, we are seeing the Nifty at the kind of highs that they're at. Is there a case now for re-ratings in various sectors?
Yeah, definitely, there will be a re-rating. But again, Vikram, what happens is, like, if you look at Nifty metals as one example, the markets move in anticipation. They are a forward discounting mechanism. Markets are actually predictors of what's going to come. And the 60% year-on-year growth in the Nifty metals is really a pointer to the manufacturing resurgence that we are now seeing. So the economic data kind of follows the markets. Markets would have moved much ahead. But overall, for the next 1 year, I think commodities seem to be coming back with the economic growth getting better. We are expecting China to turn the corner on manufacturing. That will show up even more stronger. Oil, for example, I think most of the peak demand is in for oil. So, this 90 on Brent might go ahead on speculative bets, but most of the demand surge has already got baked into the market. So, the first question which you had started, how much is it discounted already? The markets are very complex forward discounting mechanisms. They've discounted it, but definitely there'll be a change in the winners. And what we can tell you is that the losers right now, at least for the next 1 year, is the IT sector, but the market will move ahead. If there is good guidance, if there are green shoots coming up, the market will move ahead of the actual company performance coming in. I think after these earnings, a big catalyst will be the July budget. There'll be a lot of hype around that. And that's why I'm expecting maybe sideways market for the next couple of months, going into the politically strident speeches that will follow and the way things move out. But come June, the markets will take positions in anticipation of a blockbuster budget in mid-July.
Yes, the budget is going to be an important piece for the markets. There's no taking away from that. But right now also, Sunil Subramaniam, we are seeing this, and this is something that Ajay Bagga was talking about, the rising crude oil price scenario. Gold hitting record highs despite a strong US dollar. So when you consider these moves, what should be the largest takeaway for investors when it comes to positioning their portfolio for the future when you see these kind of moves in the commodity universe?
I think diversification is the key.
Okay.
Because like Ajay correctly mentioned, in some sectors, the market has over-anticipated the future. In some segments, there could be positive surprises. So it's hard to sit down and do the guesswork on what actually is going to happen because markets, like he said, I like to use a different word in terms of predictor, say lead indicator. So markets very often are lead indicators of the economic growth. So the markets are predicting a strong growth in the manufacturing cycle, right? Now the point is markets don't know when. The issue of timing. So the point is that you've got to diversify because things will ultimately play out, but there could be intermittent shocks. One. Second is when you're playing the commodity cycle, right? Oil actually for India is a contra to the commodity cycle because oil prices, when they rise, there is a nervousness within hedge funds that the Indian rupee would tend to feel pressure. India's inflation would tend to feel imported inflation pressure. And there tends to be panic selling from India if oil shows a move past the, let's say, 100 kind of thing. Because remember, the ongoing winter is coming from October onwards. There's going to be winter when the heating demand for oil will crop up. Second, don't forget, after the elections, we have the big US elections. So the Trump versus Biden debate is another thing that's going to hog the headlines. And there'll be lots of political announcements around that. And how the war is going to play out if Trump comes back to power. So a lot of uncertainties. So I would suggest that don't put all your eggs in just a couple of baskets. Diversify. Second, have outlook portfolios. You have 1.5 years, you have a 3-year outlook and a 5-year. Spread your portfolio across different time zones so that something or other will play out for you. So key, I would say, top of mind is be diversified. Don't go sector and stock choosing at this point from a retail investor's perspective.
That's sage advice. Ajay Bagga, you talked about what the budget could bring to the table in July. Now, as far as public sector banks are concerned, they've done remarkably well for themselves. Do you see their dream run continue? And in fact, I wanted to talk to you about PSUs. In general, there is a sense that if the current dispensation returns to the Treasury benches, then the public sector companies get a fillip. Is there something in there that investors should consider? And very quickly, since we are running out of time.
Yeah, definitely. I think the PSU theme will continue across railways, across defense, power utilities, as well as PSU banks. I think that's a sector that can be looked at. There are ETFs offering exposure on a very easy basis. Small amounts also put in. You can own the entire PSU segment. I think that will work well going ahead as well, Vikram.
Very interesting. The kind of moving pieces that we have right now as well, what's happening globally, what's happening in the Indian context, and the elections will have a key role to play. We are going into Q4 earnings. There could be volatility in the markets ahead of it, like Ajay Bagga pointed out. But yes, we're going to be watching all of this and keep getting the sage advice that we do from our market watchers. Sunil Subramaniam, Ajay Bagga, many thanks for joining us for your perspective on India Tonight. And earlier,